Good morning and welcome back, guys. I hope it was a great weekend. So today is Monday, and what we have here is the Euro US dollar daily contract. And as you all know, this is our daily market review, which we do call out what happened on the daily and what we are expecting for going ahead. And again, this is for educational purpose, not a financial advice. And also it's a guide if you depending on how you want to make use of it. And whatever I'm saying here is not a way for you to go into your chart and trade. I'm calling them out so it can help you go into your chart, look at them and call out those areas and see how effective they occur and how often you can trust them. So that being said, we jump right into our today business. So the Euro US dollar daily contract for Monday 29 January 2024 deliver nicely as call out on previous week Friday. So as you can see, we did deliver a lower price which we already call out yesterday. And on the daily contract, we can see that we priced into this particular down close candle, which is an ICT daily bullish candle, and it is formed on Friday 8 December 2023. Now we deliver into the high of that candle today. We just tap on it and rally higher. So since it is occurring at discount, we might see its effectiveness in price as well. I hope you I'm just calling out this area. Well, the Euro US dollar did deliver lower and taking out Friday low and previous week low, which last week Friday is the low of the week. So I tend to put it like this on my journal that it takes out the Friday low and previous week low, sell side liquidity and price higher and price lower into the daily ICT bullish order block, which is the one I'm just explaining. Now the daily ICT order block will not have much effect on price if Euro is interested on the sell side liquidity, which is the sell side liquidity that we have as our overall draw on liquidity. So although we might see a short time rally higher, but we're not expecting that rally to come and take this. But if price is interested in this, who am I? I'm not imposing my will on price. I'm only reading I'm only calling out the price based on how it is playing out. And whatever price is showing me, that is what I'm going to work with. But currently, we expecting a little higher price on euro on the smaller time frame. So that is it. Then casting forward, we can still expect a bearishness or a weakness in the euro, but might see a short time rally higher in price above a short-term swing high to engineer liquidity for the bearish move. Having this thought that price just traded into a daily ICT order block in discount, we are trading at a lower probability zone to expect a decline in price, meaning that having call out all these areas in price, that is we are actually currently trading, we are in discount, and it is really not good to be a seller at a discount price. Then we also price into a bullish order block, so a discount bullish order block. So all these things together, if you are going into short, that means you are actually trading a high resistance liquidity run. That means there is high resistance against that particular bias, that bearish bias, and we should also expect a short term rally higher, maybe above this particular swing high, which is the previous week Wednesday candle swing high. um we don't know yet, but we actually trading at a discount price, so being a seller at this price is actually a high resistance liquidity run. Then we might see a swing high above today high and Friday candle high. That is, if we go on a lower time frame, we might see a swing, a price, market price above a particular swing high, which is Friday swing high or today swing high. So that being said, let's go to the dollar index and see how correlated this particular market tends to be right now. Okay, this is the um DXY, which is the dollar index daily contract. This is a lot to see. Now we can see that there is a very high difference in this price right now, because according to what the XY is showing, if we are actually bullish and market is willing to come for this internal range liquidity buy side, then we're not supposed to see a sharp decline like this. We're supposed to close above this particular high. We're supposed to close bullishly above it. So seeing that we close now with how the market price and close in today price action, just shows that it can actually be a liquidity run. Now, and if that is a liquidity run, then we should expect a short time price rally lower, a short time lower in price. So having this in mind and going and correlating this particular concept with the euro, then we can also see that there is a higher probability of seeing a short time price rally lower in dollar index and a long time higher price on euro, or short time higher prices on euro. So currently, I don't know if we are going to come for this sell side liquidity, which is this previous week low, and price again into this volume imbalance. But I do know that there is a higher chance of us coming lower, or of us seeing a down close candle or the XY going in tomorrow. So that is what I want you to have in mind, and also that's what I have in mind going in tomorrow. But we're not going to oppose this wheel on price, but we're going to see how price is traded during each and every session. And plus, we have a news event coming up, and that news event might drive price as well. So don't trade during the news. You rather wait after the news, then have a clear bias before engaging. Tomorrow, if I am having a bearish bias on the XY, I would not want to trade before uh the news. Then after the news, I can go in and apply, and trade toward my bias. Then if I get taken out, that is I'm wrong. And if it goes my way, that is no lesson for me that day. But if I'm wrong, that is when I can learn. Then I can understand where what I did wrong. Okay. So that being said, we should go on the 4 hourly contract on euro dollar. So this is the euro dollar 4 hourly contract. So and the euro US dollar 4 hourly contract shows nicely the price delivery for today trading range. And on the 4 hour, we can see that euro price lower and swept the sell side liquidity and begin to price back into the range. Now, I am very pleased to see euro deliver price lower and tap on the daily discount OB at what the daily discount OB before pricing higher. Now, casting forward, euro US dollar might price higher and take out the 4 hourly swing high buy side liquidity, as internal range liquidity before pricing lower or higher. Meaning that this particular sell side buy side delivery is vulnerable to price right now, since we are expecting a short time rally higher on euro, and this is the sell side created today, and this particular leg lower in price tap on the daily ICT order block. And also we can see that we have a there is one thing I call out here. This particular difference in price is a fair value gap, but if I put a rectangular block on this particular difference in price, I don't know, let me expand it for you guys to see. What I'm calling out is this area. Sorry, I don't know why my laptop is kind of slow right now, but I think I need to work on the RAM. What I'm saying is this particular area, this high and this low, is a fair value gap, or what do you call it, CB. And you can see how the market, although we wig above it, but you can see how it is using that particular area right now. So you need to be very conscious when you are actually trading. All these kind of thing, you need to take them into consideration, so you not just be how will I say it, you not just be jumping up and down. You need to be very patient, and we see a fair value gap here that has been tapped already, and the way we tap on it is called institutional order flow and trade drill, which also did occur today. Then that being said, we let's go to the dollar index and see how these two pairs are correlated. Okay, this is the dollar index 4 hourly contract, and also we can see that on the dollar index, as soon as we market price above this, we rally lower deeply, and we can see a very sharp decline in price, and this indicates a whole lot. Yes, I'm saying it indicates a whole lot that we might see price rally back into the sell side liquidity, which is our initial target going in tomorrow. But before we get here, where we need to close this particular opening gap that occurred today in price, because we closed here yesterday and now the new open has already dig lower. And whenever market is trading and you are seeing the XY giving a gap in price, if it's giving a gap higher, that means there is a potential higher delivery in price. But if it's giving a gap lower, that means the the market, or the IPDA, the interbank price delivery algorithm, is engineering what sell side delivery. And one of the things you need to have is that for them to be able to be a buyer, they need to sell the market, and for them to be a seller, they need to buy the market. Now they need to the market needs to go up for them to be a seller, then the market needs to go down for them to be a buyer, because they prefer buying at a very deep discount and buying and selling at a very deep premium. So that is currently what I'm looking at. Then if we price below this SI, we have this for our BC, which it can also hold price. Then if it's not effective, we might be looking towards this volume imbalance. But going in, just have all these parameters and all these things at the back of your mind. So that is it. Let's go to the hourly contract on euro. So this is the hourly contract on euro, or 60-minute contract, and we can see how this they deliver in price, and how price deliver with all these parameters. Now the Euro US dollar hourly or 60-minute contract shows how perfectly price is engineered in today's trading range. Now on the hourly contract we can see that Euro US dollar begin lower price delivery in early hour of today trading and price into the ICT daily bullish order block. Now the daily profile, meaning that at we open today and start delivering lower prices on euro at the early beginning of the opening price. Now the daily profile is an obvious 2 o'clock AM New York local time as the high of the day that swept a short time swing high and price into an imbalance before delivering lower prices, which is this particular candle. It is the 2 o'clock AM, this oclo candle. You can see there is a swing high taken, an hourly swing high taken here, and price really take out this short time high and price into this imbalance. IOF price delivery, institutional order flow price delivery. So as price get into that area, we start delivering short lower prices, and it was very sharp move lower. Now the low of the day is formed at 10 o'clock AM New York local time that price into the daily plus ICT order block before pricing back into the range. This particular candle is formed at 10 AM. It is the low of the day that price into that daily order block before pricing higher. Now casting forward, we can see we have an ICT hourly fair value gap below the current trading range, and we can expect that to hold price and from rallying lower. We can expect that to hold price from rallying lower and support higher price delivery on euro. Now going in, my next draw on liquidity is a short time swing high, which is the buy side liquidity. So currently my current draw on liquidity is this buy side liquidity, and this is the fair value gap, which is the hourly fair value gap or BC I'm referring to, that might hold price and we can wick into it then before going higher, which is a very great illustration here as you can see. So that being said, let's go to the dollar index. Well, this is the hourly contract on the dollar index. Yeah, there is a whole lot to see here. That we close here on the hourly yesterday, and now we just jump all the way into here and open here. So with this difference in price, we might cover some parts, and if you look at the XY, there is no reason for the XY to get into this 4 hourly fair value gap or CB. So if that's the case, but we might just have this on our chart and see how we are trading when the current session came in. But we can also see this sell side liquidity here and sell side liquidity here. And how far can we go? There's 4 hour CB. And we can also see how this was a liquidity run, because the way price shows it indicates a liquidity run on this price. So that is currently the situation of this dollar index and euro. But overall, in a long time perspective, we expect higher price delivery. But currently, I think we are still trading on the monthly range, which I call out Saturday, and the weekly range. So we just perch above and we are going back inside the range. So that is very perfect move, and we just have to focus our mind in the short time price delivery. Don't turn your daily bias into a weekly bias. So just stick to your little pips and make sure you make good use of it. So with this, I've come to the end of uh, today market review, and I hope it was insightful. Please do follow us and like, comment, and like this video and share with your friends and family. Thank you and God bless you. See you tomorrow.